Alright, so this is the 2020 incomplete. It's a 60-mark question, so it'll only ask you to do the balance sheet. We'll obviously do the lot of it. So just have a read through and see if there's anything in it that you haven't really seen before. Just a couple of things to note. There's investments, so 4% investments, which means you're going to have investment income, which also means you'll have investment income due. There is a bad debt provision. There is depreciation, drawings, and then he uses the loan and it tells you what he's using the loan for, so premises and a new vehicle. So they're just things to be aware of. So first job, I'm going to put in the 500,000. So it's the 500,000 that we use as our capital on the 1st of the 1st. So I'm going to put in all my stuff from the bottom just to get them out of the way. So, and I might also throw up things that I was unsure of. So we've got current assets. We've got closing stock, 32.8. Now it's 32.8, but there's 400 stock of oil, so it's 32.4. So we've got 400 there. Then we've got our debtors, 54,000. We've got creditors, which is a liability of 32.6. We've bank, 48.6. Asset. And electricity due, which is a liability, 960. Now I'm also just going to put in that I've got investment income due here, so just so I can't forget about it, because I've written about it. Okay, next job is the goodwill. So we have to compare the value, or the amount we paid. So we paid 450 to the value of the business. So its value is 300,000. So we add up our assets. So 300,000, 25.3. Rates prepaid is an asset. Delivery vans is an asset. 84. Creditors a liability. Wages due is a liability. And the investments, 25,000, are an asset. So so 450 minus 385,050 is 64,950, which seems very high. So I'll just see if I've left something out there. $300,000, 25.3, 4. I've left out the debtors, 47,000. So 17,950, that seems more like it. We'll just put those in. Of course, there's no way knowing if you're right here, so just be careful with all of these things. Maybe double check everything as you go. You won't be stuck for a time. Okay, so that's your top end then. So starting with premises. So we know there's premises starting off at 300,000. It says he borrowed 270 at 4%, which together with 20,000 of his own funds was used to purchase a premises, costing 245. So it starts off at 3 plus 245 is 545. Go down and check if there was any depreciation. There isn't on the buildings, so that'll be 545. Next one, stock. So that's your opening stock, 25.3. Debtors, we don't do anything with an incomplete piece. Be used to work out sales, so don't have to worry about that. 3 months rates prepaid, so that's our next working rates. So if we look, if we've got rates during the year, he pays rates for 12 months, 32.4. So there's a prepaid at the start of the year, which we'll add on. It's 2.1. That's for 3 months, which means there has to be prepaid at the end of the year, also of 3 months. So we take the 32.4, multiply it by 3/12. That's 8.1. Now, before you go any further, put in that rates prepaid in your assets. Okay, and then we can take that away, add on the 2.1, take away the 8.1. Jesus, that seems very high again. Just have I used the right numbers there. So we look at rent. Jesus, that should have been 10.320. So it's 2.580. Again, the importance of taking care. Again, if you see numbers that are way out of kilter, like that are far too big, well then you know you're probably wrong. So your rates is 9.840. So that's that one done. Delivery van 84,000. So again, we know delivery vans are an asset. 84,000, and he used the remainder to buy a delivery van. So he borrowed 270, and then he put in 20,000 of his own money. That's 290. If he spent 245 on a building, means he must have spent 45 to get us up to the 290. So it'd be 84 plus 45, which is 129,000. Now go down and see if there's any depreciation. Yeah, date of purchase to date of sale. All right, so it gives you the dates. So we'll work these out. So depreciation of delivery vans. It is 20%, so you had 84,000 for the first 8 months of the year, and you had 129 for the remaining 4 months of the year. So that's 19,800 is your depreciation. And we'll throw that in there. Yeah, 109,200. So that's your rates done. Your delivery van done. Trade creditors you don't have to do anything with. Wages due, we add that onto our general expenses. We take it away from our general expenses. Doesn't really give us an option there for general expenses. So I'm going to come back to that. I'm going to put, it doesn't go in the, that's bizarre. It doesn't go in the, doesn't go in the current assets. It doesn't go in the balance sheet because it's at the start of the year. I'm just going to, as I read through, just make a note of that. It has to go somewhere. So I'm just going to put in less wages due here for the time being. Minus 12,750. Because you're not asked to do a trading profit and loss account, it's an easy thing for them to leave out. It doesn't make any difference to the answer. Anyway, your 4% investments, they're an asset. And your 4% of investments are 25,000. You've got investment income then. So that'll be 4% of 25,000. Which is 1,000, and then investment income due is 1,000 minus whatever we've received. So we've received 750, so the investment income due is 250. Okay, so that's that done. All right, then your drawing's working. So you take stock, 280 a week. So 14,560, just put that in our purchases as well. Just to remember to do that later on. And he takes cash, 150 a week. So 150 by 52. All right, number 2 then, he borrows 270. So now he's paying it back in installments, so we're going to have a loan installment due here. So obviously read down and see how he's repaying it. So it's being repaid over 15 years, 30 half-yearly installments, so 2 installments due within the next year. So the loan is 270. So if we take that 270 and just divide it by 15, that will give you the installment of due of 18,000. So then the loan will be 270 minus 18,000. So that's 252. Okay, now the loan interest is 4%. So it's 4% of 270 by 9, 10, 11, 12, by 4 months. Excuse me. Excuse me. So that's 3,600. Okay, now take away from that whatever you've paid. So we've paid 2,000. And that gives you a due of 1,600, which of course is a liability. Now, before we put the loan expense in, let's see if there's any drawings on it. So 20% of the loan is drawings. So 720 is drawings. So we're going to get our loan as 2880, our loan interest, and the 720 going into our drawings working. Okay, so that's the loan and loan interest done. Now, the 20,000 of his own money, that's capital introduced. So you can't forget about that. So he's put in 20,000 of his own money, and he also lodged an EU grant of 18,000. So I'll put them in separately actually, 20,000 and then EU grant 18,000. They're both capital introduced, but I'll just show them separately for the sake of the video. So that's that done. During the year he lodged the EU grant, we've done that. Investment interest we've done. The payments, so light and heat is next. So light and heat is 5,600. Down at the bottom of the question you have electricity due of 960, so you need to add that on. And we have to take away the stock of oil of 400. And that gives you light and heat used of 6160. And then check if there's drawings, that's 15%. So 15% of 6160 is 924. So take that away, and you'll get your light and heat is 5236. And we'll also remember to put that drawings in, 924. Into the drawings working. The loan interest we've done, rent for 12 months. Now I know there's a working on that. So rent starts off at 32.4, and it tells us that the figure for rent was for a warehouse that's rented on the 1st of the 11th, payable in advance. So only 2 months are this year. So rent prepaid is going to be 10 months. So it's 27,000 is prepaid. Okay, so the rent expense is going to be 5,400. And 27,000 rent prepaid as a current asset. So that's the rent done. The rates we've done. Cleaning service for his own private premises, 1,200. That's drawings. We've done the rent, we've done the drawings, we've done the depreciation. We haven't done the bad debt provision. So I should have really put it in here, but just move it down more. So bad debt provision is 3% of debtors. It's 3% of the 54,000, which is 1620. Okay, so that appears to be everything in. Yeah, looks to be. So we'll just put in our drawings. Drawings is 25204. Okay, so that's everything, I hope. no way of knowing, I suppose. So we'll just add up our fixed assets. 697,150. 163,610 for the current assets. 53,160 for the current liabilities. Take them away. Add on your answer. You get 807,600. Now we put that 807,600 down as our capital employed. And then you can do your sum here and then take your answer away from 807,600. So and you should get 42,804 for your net profit. Okay, so we'll bring that 42,804 over here. So there was no wages general so we just have to put it in as a minus. There's nothing else we could do. So that's 3406. So your expenses are 3406. So you need to add them back on. And you get 73,210. Take away your investment income of 1,000 to get, remember, doing the opposite all of the time. So that gives you a gross profit of 72,210. So you can just check that. So 72,210 minus 1,000 is 73,210. 73,210 minus 3406 is 42,808. Just put in your closing stock. Now, we don't know, we can't actually go any further because it doesn't tell you the percentage, but let's say it's 20% of sales. If we take that 72,210, divide by 20, multiply by 100, that will give you your sales. Okay, the difference then is 288,840, and then just work backwards. Okay, so if that's your cost of sales, opening stock plus whatever purchases is minus 32,400, closing stock would it be equal to 288,840. So your purchases then will be 295,940. So 295,940, add on the 14,560, that gives you 310,500. So 310,500 minus 14,560 is equal to your purchases. Now the last question then, it says illustrate how the accruals concept applies to these accounts. So illustrate means you have to use an example, or you have to show within those accounts. So the accruals concept, I think we spoke about this just before the midterm. So that's the idea that all expenses are accounted for when they happen, not when they're paid for. So they're accounted for in the period that they happen, not when they pay for. And the accruals concept creates dues and prepayments. So if we want to illustrate in the example, we can say, well, the rent was payable in advance, and the rent was 32,400 payable in advance, but only 5,400 of that rent was for this year, so only 5,400 can go in this year's accounts. The remaining 27,000 would be prepaid. You could say the same for rates. Any of the workings that have a due or prepaid in it. You could say the wages due. So at the start of the year, there's wages due. So they don't go in this year's accounts, so they have to be taken out of the expenses for this year and put into last year's accounts. You could say any investment income earned must be included in the accounts, whether it's been received or otherwise. So we could say all of the investment income, the 1,000 investment income gets included in the accounts despite the fact that only 750 has been received. So try and give 2 or 3 examples within that, and that'll get you the marks. All right, hopefully that's of some use.